So what a move from Meta that is. Meta shares are up 20% in pre-market, and yesterday we had the Fed and Jerome Powell being a little bit more dovish, not too much, but they were a little bit more dovish, and that helped the stock market. And then after hours, what a move from Meta, 20% up in pre-market, and that is miles away from where we were at a few months ago, which is just absolutely crazy. So for you guys that are holding Meta shares or were even buying Meta shares, congratulations. Like me, you're going to be seeing some good money in your broker's account today, so well done for sticking through that storm. But before we go on to the earnings and what's causing this 20% surge in the share price, let's just look at where we were at only 3 months ago. I made this video only 3 months ago talking about Meta shares crashing 20%. And you can see here in pre-market at that time, the shares were down 21%. The stock was $100. The Facebook Meta shares were $100 on this day. It actually says here, closed the 27th of October, only 3 months ago, $101 for Meta shares. And you look now where we were going to open up around $180 plus a share. And you look from that time frame from only 3 months ago, if you were really heavily, in fact it actually went down to $88. If you were really heavily buying that stock in that time frame, or even potentially you own shares and you had the coconuts to carry on holding the shares through that storm, you are absolutely laughing. You are going to be up over 100% on them shares that you were buying in that situation. And it's crazy to see in 3 months how quickly that sentiment can change around a stock. I mean, obviously when you look back now, when you're looking at Meta and it was, 10 times earnings, it actually went into the single digit times earnings. Obviously you're looking at that and going, even with the questionable Meta spend going on, you're looking at a quality blue chip company that trades at single times earnings that's still going to be a good solid company in the next 5 years. And you saw negativity in that situation, and it shows you that when you're in this bear market and when there's all that negativity around the stock, you've just got to cut out the noise and think, do I still want to hold these shares, or potentially is this an opportunity to buy these shares at really good valuations? And that's been the really tricky thing in the last 12 months, is cutting out the background noise and looking for opportunities. And you could have listened to all this noise. You already had to deal with the pressure of Meta shares are going down, and then you have the noise of potentially short sellers that are really jumping onto it, or just the negative tone that was out there, as well as having them short sellers to deal with. You had potentially people that have been burnt by Meta stock, or retail investors that are really hurting in this in the bear market and putting even more pressure on the stock and more negativity. And that was the hard thing to kind of blank out and go, is this an opportunity in Meta stock? And if you took that opportunity, you're absolutely going to be laughing today. And the thing is as well, is when Meta opens up 20% up on pre-market, or when it opens up 20%, Meta at a 401 billion market cap company, this has so many knock-on other stocks. Like if this holds, it's probably going to end up dragging the whole market up, and we're probably going to see a really good day in general. And you might have seen this morning S4 Capital putting in a really good day because of that situation of Meta jumping. And when you look at it, it was such an obvious opportunity to buy. I mean, just looking back, it's funny because looking back on these videos, I get to see my thoughts on this situation, but I also get to see what other people's feelings were and how quickly that can change in 3 months. We had a comment here from Andy Pickering who was saying it's a hard to understand stock, which is not a buy at the moment. You saw the likes of David Best who was saying no one pays attention to social media ads anymore. It's not a buy at the moment. And you had Ding Peng, I think I said that right, who said Facebook sucks with so many fake news and spam accounts. It's going to drop to $30. This is how negative the sentiment was only a few months ago. Light of Earth was saying, no way this is a good investment. It's going to zero. That is how negative. It's hard to imagine now because the stock is up so much in pre-market. But this is where we were 3 months ago. This is how negative the sentiment was 3 months ago. But then you had people like Goda, who I know he watches the channel quite regular, and he's a Patreon member as well. And he said that on this dip, he quadrupled his position, and he was someone that ignored the noise, and he thought, you know what, this is a good opportunity. Sure, there's a few issues going on here, but there's too much noise out there. I'm going to take this opportunity. And someone like him is going to be absolutely loving today and rubbing his hands going, oh my days, I'm going to make so much money today, just like how I am. So that was just the first few minutes just talking about sentiment and how funny and quickly sentiment can change in the market. Now when we actually dig into Meta's earnings, you'll actually see they were okay. I mean, they were probably 5 out of 10. You'll see here that EPS was a miss. Revenue was a decline of 4.5%. The earnings were they weren't great, but actually when you start digging past that, you saw that user growth was still pretty decent, which is unbelievable to think. You think that Facebook has kind of maxed saturation and they still keep adding users onto the platform. And obviously when you think about if it keeps adding users, that's more people to market to and make more money to, which is obviously positive. The guidance wasn't really much of a shock. It was basically where it was the range that we thought it was going to be. Maybe even, dare I say, a little bit on the higher side, but not much shock there. The big thing is Meta really focused this on Wall Street. They reacted to Wall Street selling off the stock and went, we're going to have to give them something here. We're going to have to focus on what Wall Street want, which is more profitability. And this quarter was massively targeted to Wall Street and making sure they said, we are going to focus more again on profitability. And they mentioned things like this: we anticipate our full year 2023 total expenses to be 5 billion lower from their previous outlook. 5 billion lower. So that was a massive difference. And we expect capital expenditures to be in the range of 30 to 33 billion, lowered from our prior estimate of 34 to 37 billion. So once again, you nearly got a 4 billion lower in capital expenditures as well. So you're seeing Wall Street really liking this more focus on profitability. And going through the press release, you'll be able to see here that they had ad impressions delivered, so the amount of times they're showing ads, were increased by 23% year over year. So they're showing more ads. But you'll see here the price per ad decreased 22% year over year. So it's really important to remember that Facebook are maximizing how they're showing their ads, but what do we have at the moment? We have a negative environment where companies are pulling back spend, so they're not focusing that much on marketing. So you got to remember, Facebook and Meta, when we have a better economy, more companies will be happy to increase their spending and marketing budget. And if they've got more users to advertise to, and they're also showing more impressions, when eventually there's more demand for marketing and they can put their marketing prices back up, this is going to massively help them going forward. So people looking forward going, okay, in a few months or a year's time, when we see a marketing rebound for businesses, this is going to be a very good place where Facebook and Meta are in. Another thing is the share repurchase. We repurchased 6.91 billion and around 27 billion of our Class A common stock. So they were heavily buying back shares, which you would do. When this was getting to $100 or even double digits, it totally made sense for Facebook to be doing, or Meta to be doing that. So that was a really good move by management team. They then also announced a 40 billion increase in the share repurchase authorization as well, which is obviously going to help. Now, you probably would have seen Facebook or Meta did heavily increase their headcount, which is one thing that really hurt their profitability. But you'll see here that they are going to now do some layoffs, which they announced in November 2022, which was 11,000 employees. Now, they said that this isn't recognised in this quarter, but will be in the next first quarter. And obviously, that's once again another thing that's going to help the profitability. Now, I listened to the Meta conference call a few hours ago, and these are the key things that I actually picked up from the conference call. Efficiency. I heard so many times about efficiency. I think I heard Mark Zuckerberg mention efficiency at least 10 times. It was the buzzword, and that's what Wall Street really liked. The mention of improving the profitability and not spending so much money and seeing that rise. And like I said, this quarter, this earnings report was really tailored to Wall Street and going, okay, we found out you don't like us spending all this money, we're going to improve it. And that's why there was the big jump on the share price. And the key thing is that it wasn't just, okay, we're going to be a little bit more efficient to make you happy. There was quite often by Mark Zuckerberg the use of continued efficiency. We're going to continue to make it more efficient. They weren't going to go, this is us done. We're going to keep focusing on this. And I think that's also what Wall Street really liked. And as well as when you look at Meta, what's it really been impacted? Mark Zuckerberg said it was a tough 2022, but we started to move back into a better place by the end of the year. And you see that with like marketing. When you're a marketing company and you enter a slowdown in the economy and companies are a bit nervous to start cutting back marketing spend, obviously they're going to get hurt massively, which we've seen. But the other thing is what happened in 2022. You had the big competitors to TikTok, and that really, as well as the Apple changes, but you had the big competitor TikTok coming in, and Facebook and Meta had to transform in 2022 to battle away with TikTok, very much like how they had to do with Snapchat 6-7 years ago when they had to launch the stories, and they were really started to compete against Snapchat, and they won that battle. The same again now happens with TikTok, short form content. And what did Facebook on Meta, what did Mark Zuckerberg once again have to change the business to? He had to go, right, we need short content being pushed, and they launched Reels. Now the big thing is with Reels, they launched Reels and they were trying to make sure how they have done previously with the stories, for example, how they make sure they get it out to the audience, what is more efficient, trying to get that area to growth, which you've seen. And Mark Zuckerberg said we didn't get enough credit for how fast we really transformed Reels and helped our business. The other thing is that Reels is only just starting to take monetization. When they switched to Reels, it wasn't really monetized that well because they were trying to figure out how to do it. And now the big thing is when you go into 2023, the monetization will really help with Reels and the short form content that they've been using to battle away with TikTok, and that should really help them. So they've really started to come a bit more competitive to TikTok, and we've seen the potential success of that in 2023. So overall, my thoughts with Meta's earnings is that they were okay, but what we wanted to see is Mark Zuckerberg focus more on efficiency, and that's what he did. He mentioned it so many times, and they have kind of got to the point where we go, okay, this is what we want to see. We were going to slow down how much we're spending. We're going to focus a bit more on profitability. And when you look at what the valuation it was, and even if this company isn't a growth company anymore, where it grows double digits and it still grows, single digits, let's say 5, 6, 7% a year, and that profit now goes back into a positive direction, it was very clear to see this stock was undervalued. Now, the question is at $182, I do think the opportunity for Meta and Facebook has been missed. I think when you look at $182, I would say it's a bit more towards the fairly value now. So for anyone that's looking at that opportunity, I would say you might have missed it. The opportunity was when all that negativity was there. But without doubt, it's a lesson of you've really got to stare at this stock and think, okay, when it was $80, was this a obvious opportunity? And clearly it was an obvious opportunity. So yeah, obviously Mark Zuckerberg and Meta rotate into what Wall Street want, and now they're getting rewarded on the share price by being more efficient. So I hope you enjoyed the little video on Meta and their earnings and why Wall Street are really loving them. And well done for you guys that potentially held shares or carried on buying shares like me. So I hope you enjoyed the video. If you do want to know what I'm buying and selling in real time, make sure you join Patreon. I did actually just a few hours ago buy a stock as well, which is quite crazy to say that we've had a very good rally, and I did pull the trigger on the stock this morning because I thought it was a good opportunity. So if you do want to check that out and talk about some more Meta on the Discord, then that's the place to be. And yeah, I'll see you all in a bit.